Alright, what is up guys? It is JR and today is Monday the 9th of January 2017 and I just wanted to record one more quick video because I have what appears to be a perfect setup. I'm really liking this setup a lot. Initially when I first entered the trade I wasn't planning on recording it, but after viewing it for a tad bit longer I said alright, this is going to be a good trade. I'll be able to demonstrate a runner and hopefully demonstrate a runner. And it's just a perfect setup. So let me explain what we have going on right here. So basically we have it's kind of a range day essentially, in the sense that the overnight we traded down, then after the market opened we continued to trade down a bit further, and then we had a slight bit of a correction. Hold on one second, I'm a bit distracted looking at this trade, so I guess I'll let this trade finish up and then I'll go into the recap for the day. So basically what we're doing right here is we're treating this as we're going to treat it as a failed second entry short, although essentially it's not a failed second entry short because it did push down to a new low. But we had our third touch of our trend line right here, which technically confirmed it. So we just drew this off the first two swings. We had a nice bullish reversal bar as the third touch off the trend line, and then we had a strong move down when we came off the highs. So essentially we had a break of our short-term trend line right here, and then I counted this as my first entry short, and then this is my second entry short, which we did succeed in pushing down to get that new low, but I'm going to treat it as a failed second entry short because it's the second attempt to go higher, and as you know, when the market attempts to do something twice and fails, it's going to succeed going even further in the opposite direction. So we're treating this as a failed second entry short, a break of our short-term downtrend, and a push to a new low. It's a nice bullish reversal bar. That's all we've been getting off of off this trend line right here. So clearly the buying is strong, and it's a perfect setup in my book. Right off the trend line, which is our key entry point. The only thing is that we're slightly below the EMA, but I'm not concerned about that at all. And it's looking quite clean. It's looking very clean if you ask me. And yeah, that's pretty much what we're doing right here. Technically, it's not a second entry because we have our first attempt to go higher right here, but I like to really count second entries as the legitimate attempts to go higher. So technically I didn't really count this as a second entry, although if you want to be really technical it is. But this is my first genuine attempt to go higher, and then this is our second genuine attempt to go higher, because as you can see we have actual buying strength right here. So I'm treating this as a second entry long, failed second entry short, right off of our trend line slash key entry point. And yeah, hopefully we'll get some gas in a second, because I don't want this video to be longer than 10 minutes at the most. So I know once we push past a couple ticks above this area, we'll definitely have the strength that we need to get our 2 points for our runner. And yeah, we should succeed in going on up to the upper end of our trend channel line. So yeah, I guess let me just go back and briefly recap what happened throughout the day. The volume hasn't been as heavy and as thick as I would traditionally like to see. I didn't really see too many trade setups today. There was a long right here, although I was a bit skeptical about taking that because we had this move down. Initially I had my trend line drawn differently. I don't remember exactly how I had it. I think I had a bit of a spike in channel right here. So I wasn't sure if this first line was legitimate and we had a break and a push down to a new low. Apparently it turned out to be, because we reversed right here. But you have a long setup right here. Technically it's a failed second entry short. Not completely, because you get your first attempt right here and then your second attempt and you get a nice bullish reversal bar, which actually triggers the failed second entry. Then you get a pullback and another smaller semi-neutral, but pretty much it has a bullish tint to it, so you could have gone long right there. And obviously they trapped a decent amount of people to the short side, as you can tell by the way we kind of rocketed on out of there. So there was a long setup right there. And then there was also a long right here, but I definitely didn't take that because as you can see this is heavy chop right here. We're going incredibly sideways, but they definitely trapped people to the short side with this big bearish reversal bar. And then as you can see we went out the bottom and continued very strongly out the top and had a nice pop right on up to the upper end of our trend line. So we're ticking off of our exit order. We should get this thing filled within the next, I guess you could say 20 seconds, hopefully, if we just trade through this. And then I know once we Once we break a few ticks above this, we'll definitely get a surge because people shorted right here when you can see this strength in the selling. And whenever they short, some people are swing trading, so they're still in this. And when we push a little bit higher, we're going to hit their stops, and it's going to cause a bit more of an influx of buying to enter the market, which will give us more directional strength and to the long side. So what was the last thing I said? Yeah, there was a long right here, another long right here. I definitely didn't like this one. Although it's right off the EMA, I didn't like it because this is way too sideways. And usually when you have something this sideways, it was also into heavy resistance. And when you break out of that, you're most likely going to come back and retest it, which eventually we did. So yeah, those were the only 2 trades that I saw so far. Well, 1.5 basically. And then there's this long right here. And those were the only ones that I was really comfortable with taking today. So it's been a bit of a slower day, slower than what you'd like to see, but if you're patient, then you'll find some good trades. And another thing that I want to talk about, patience is really key. If you guys are just starting off trading, if you're just starting off, then I'll just suggest taking everything that you see, everything that you think is correct, because it's really important to take everything that you think is correct in the beginning stages so you can take those losses and then study your losses and figure out why what you did was wrong. But if you've been doing this for if you've been doing this for quite some time, you understand all the rules, you have everything down. I don't really suggest taking everything that you think is correct. I suggest sitting back and just kind of watching prices move and only taking the things that you think that you're pretty much certain are going to be correct, because what that's going to do is it's going to increase your discipline, which in this business, discipline is everything. Because if you're just jumping in and out of the market when you don't have a clue, when you're not certain of what's going on, it's really going to mess you up. All right, so we got a pretty bearish looking bar right here. I'm not concerned about that at all. All this is going to do is it's going to trap more people into the short side, and it's just going to put more strength in our direction to the upside. So I actually like that this closed like this, although I would have liked it more if we closed bullish and just blew through this, but I still like this bar, and I definitely think we're going to continue to the upside. But what was I talking about? Discipline. Discipline is everything in this. This market, it pays you for being disciplined. It pays you for sitting back and just being decisive and disciplined and waiting for the ideal key setups. And where do the key setups come from? They come from the key entry points, your trend lines. If you look at this, your biggest move was from your trend line. Biggest move is going to be from the trend line, and that's really all I have to show for key entry points on this particular chart right now. But you want to wait for your support and your resistance areas, and all trend lines really is that's support and resistance slanted, essentially. So if you're on a range day, you want to wait till you get to the top of your range, and your bottom on a trend day, wait till you get to that trend line. And as you can see, when we touch the top of our trend line, this is resistance. We turned down and had a relatively strong move off of that again. We touched the bottom, had a strong move again. And so hopefully we just blast through this in a second, because to be completely honest, I'm tired of trying to figure out things to say. But yeah, so yeah, that's pretty much it. That's all I have to say right now. It's talking about discipline, and trading it's mostly mental, honestly. Your strategy and everything is important, but I'd say that's probably your strategy is less than 50% of the puzzle. Majority of what you do is gonna reside in the mental region of your body. This is about being decisive. It's about knowing what's going on. It's about being disciplined to not just take everything that you see and everything that you think is correct. It's really about discipline. To be completely honest, it's about discipline. Because that's what's going to keep you out of that's what's going to keep you out of bad trades and have you ready for the good ones. Because a lot of times, if I had just bought this right here, the second it came back to it, I would have gotten stopped out just to see it flip back around and go in my direction. So that discipline is gonna keep you from getting into bad trades, and it's going to allow you to spot the good ones. Because a lot of times when you see a trade that looks absolutely beautiful, those are the most times, that's usually when you're going to get trapped. When you think you have a perfect setup and it reverses on you really quickly, or you see an entry when you think it's going to go in that direction and you see a nice big reversal bar as the first entry, usually you're going to get stopped out on that. You're going to get trapped, because it's the ones that look too good to be true that usually end up burning you. So usually if you sit back, you're either gonna get a better entry a few minutes later, like this one right here, or you're gonna catch a trap like down here. So for example, if you had gone short somewhere in this region, maybe you saw this failed second entry long or something like that, you saw this big bullish bar, then you saw this bearish bar come after that. If you had gone short right there, you'd have gotten trapped. But if you had been a little bit more disciplined and sat and waited for the retest of this, you could have caught a long right there and been out of there. But yeah, all right, so I'm just gonna go ahead and pause this because this is taking long and I don't want this to be too long, so we'll be right back. Alright, so we're back, and I think this is an opportunity where you can actually add on. So I'm going to demonstrate how and when you would want to add on. So I'm going to go ahead and add on right here. This bearish bar just that traps more people in there. We've got another higher low, so our first exit is right there, but we're going to add on. This is the thing that I don't like about trading this time of day. It seems like after about 11:30 Eastern time, 11:30 a.m. Eastern time, that's when we kind of really slow down. Right now it's 12:43, and you can be in some of these trades for 45 minutes to over an hour, depending on the day, and this is seeming like a pretty slow trade. Let me look at the time and actually look and see when I entered this, because I don't know. I probably entered this about 20 minutes ago, and so we've been in this trade for 20 minutes. I don't know how long the recording's been going, but I might pause it again, but I don't want it to miss. I don't want to miss when we pop up through this, because it's going to move quickly, but I don't want this to be too long, so I'm going to pause it and just kind of like stutter stop, just pause and play whenever I think something is about to happen. So we'll be right back. Alright, so we just got the add-on portion of our trade filled. So what I'm going to do is I'm just going to move up my first exit to 1 point above that. So I'm filled at, I think the average price is going to be 68. So I just moved up my exit to 69. I'm actually going to do 69.25, and then we will move up our runner up to, we'll move the runner, no, we'll keep the runner 2 ticks beneath the high of this, although we're most likely going to continue on up and touch the upper end of our trend. Let me see. If you got this leg, I mean, this thing will probably go all the way up there, but I don't want to be sitting here all day. I actually want to call it quits. We'll probably go all the way up there, but if you can get most of a move, then you did well. Don't try and be greedy and get every single tick out of it. So I think the safest thing is to just exit our runner right up top here at 69.75, and yeah, so that is, no, we'll do 2 points. 68 is our average price, although we have to remember that we entered initially down there, but we'll do 2 points, so 70. And I'm just going to pause it until we get a little bit closer. Alright, so we just popped up. We pushed through my initial exit where my first target was, so my stop just kind of shot up to break even. And now we should get that fast-paced movement that I was talking about, because we're breaking above this area, then we'll break above this area. So we're taking off of our exit, and then Yeah, we should get some juice once again once we get a couple ticks above this, just like how we got juice when we got a few ticks above that. And that's a really important concept to understand if you don't understand that. Basically, just kind of realize and remember that whenever people enter the market, they're going to put a stop somewhere shortly above or below their signal bar. So for this scenario, people who shorted right here, they put their buy stop somewhere in this region, and that's why we get that big bullish bar, because that shows that we're running through their stops and it creates an influx of buying into the market. So for my scenario, as you can see, I bought down here and my stop is 1 tick beneath my signal bar. So if we were to push through that, then you would see a bit of strength to the downside, because other people who bought down here, their sell stops are being run, and that causes an influx of selling into the market. So it's quite helpful if you understand where resting orders are located and the, I guess you could say, supply and demand dynamics that are associated with that, and how that causes different movements in the markets and big surges and things of that nature. So it's an important concept. If you understand that, that'll really help you. Hopefully what I just explained is clear and understandable, I guess you would say, but it's quite a beneficial topic to understand. And that's also how I knew to add on right here, because you have more people that enter short right there, and this upward trend line is what's going to hold. But the people who got short, they don't see any of this. All they see is this movement down, and they think that we're going to continue going down, so they go short right there. And then more people hop in short right there because they think, oh, it's another opportunity to get short, and that's not the case. So we just take advantage of them, and yeah, you use their exits to aid you in your trading direction. So yeah, I'm just gonna go ahead and pause this again, and we'll be back as soon as we break through this, or we're about to break through that, for our runner and our main scalp portion of the trade. All right, I think we might do it right now. So alright, so we got through there, and as you can see, we're getting, these are relatively big bullish bars. The only thing is this midline. Hopefully this midline doesn't turn us down, but I think we should still push through that. Let me just move my stop to break even, +1. And let me just check the prices if you were to have entered 1 tick above that bar. So the price would be 68.50, and then so if you hadn't have entered right here and you had just entered right here, then your exit would be 69.70. It would be 69.50, but you'd want to see 69.75, so that way you can be sure that you made it out of the queue. So we're 1 tick off. Okay, so you would have exited if you had entered right here. So that's just another example of why when you add on, you can actually increase your target, because technically this is a whole new trade in itself. And I'm actually going to bring this down to 1 tick, because this is a simulated account. I don't want to sit here all day long, but when you add on, it's a whole new trade in itself. So essentially you can bump up your target and expect to get more. So we're just going to pause it really quickly and then come back. Alright, so this bar closed neutral, so I'm just going to slide this up to 1 tick beneath that, so that way if we decide to turn down, because the midline is right here, we'll still take a 0.5 point, 2 ticks out of this one last contract. But I also decided to slide down my exit order from, I think I had it at 2 points before, to 1.5 points. So either or, this should finish up pretty quickly. So yeah, back to pause. Alright, so we just got stopped out on that last portion of our trade. So I don't remember the actual ticks. I'll calculate that after, and I'll put it in the description of the video. But we got 2 ticks out of this last portion, and this is another good example of why it's always good to get out before these critical highs and lows. And don't be greedy when it comes to your runners and trying to capitalize on your moves. Just take what you can get. always make sure to exit a couple ticks before these highs and lows and midlines and things of that nature, because sometimes they'll turn you down. I have no doubt that we're going to continue going higher, and there'll probably be another opportunity to enter after this failed pullback. But that's it for today. That's all I have to say. So just a brief recap of this trade right here. Essentially, we had a short-term downtrend working down. We had a break, pushed down to a new low, nice bullish bar right off of our trend line. This was our third touch, so this validated our trend line. Then we pulled back, tested it again, had a nice bullish reversal bar, went up, had a failed, this was a higher low, so technically this is a second entry counting off the low side. So this was another opportunity to get long and add on. So if you didn't enter right here, you could enter right there as well. Or if you were already in and you still were not out like I was, you can actually add on in an opportunity like this. And it was a good scalp trade. And I also treated this kind of like a second entry long, although your actual second entry triggers right here, because this is your first attempt to go higher. Your second attempt is right here. But I like to actually treat the moves that make a genuine attempt to go higher and lower. I like to treat those as my first and second attempt. So this is my first attempt to go higher, bit of a correction, pop to a new low, and then this is the second attempt to go higher, and it was a good move. It was a good move. So that's it. Hopefully you guys enjoyed this trade. Hopefully the audio sounds good. Feel free to leave any comments, questions, anything like that. And just remember that I'm still learning myself, so I don't always have all the answers. Some things that I say may be incorrect, but yeah, we're in this to learn, and I'm just here to share what it is that I see and what it is that I think. And hopefully if you can gain something from that, then that's great. And if you don't, sorry about that. But yeah, that's pretty much it. This is JR, and I will see you guys next time.